Welcome, everybody. It's great to see so many of you are about to hit 100. So, Jenny, I'll pass it to you to get us underway.
Well, thank you. And kia ora, everybody, and welcome. It's great to have so many people here. We had over 200 people signed up to join us today, and there are more people coming in as we speak. So thank you all very much for giving up your time. My name is Jenny Gill, and I've been around the philanthropic sector in New Zealand for a very, very long time. And I guess one of my great achievements was working with Sir Roy Mackenzie to set up Philanthropy New Zealand as a voice for the philanthropic sector back in the 1980s. So it's a great pleasure to be working with everybody on this webinar today. What I'm going to do is ask each of the designated speakers, as we've outlined in the program, to briefly introduce themselves. They're each going to speak for 5 or 6 minutes. We've got the chat open. So if you have any questions of clarification, if you could put them into the chat as they occur to you, and then we may get the speakers to respond to them before we open up to a bigger discussion about where to from here. So please feel free to use the chat, and I'll be organising all the questions, seeing where the themes are, and seeing what we can do. So it gives me enormous pleasure to hand over to Robin Scott, who is the Acting Chief Executive of Philanthropy New Zealand. And as many of you will know, Robin had an extremely successful term as Philanthropy New Zealand's Chief Executive a few years ago, and we were all delighted when she was able to come back in and take over the role in the middle of last year. So, Robin, welcome, and I'll hand over to you to introduce yourself and just give us a heads up about what you're going to be presenting to us.
Kia ora koutou. Thanks, Jenny. Thanks for the welcome and the introduction. As Jenny said, I'm the Acting CEO of Philanthropy New Zealand and have been since late last year, and it's a real privilege to be back in this space again. Well, such amazing work goes on through the work of philanthropy and of the community and voluntary sector in New Zealand. So I feel really privileged to have been invited back into the space, and it's great to see so many colleagues on this call today. Welcome. I have to say that I'd rather have seen you in a meeting with more positive business than the business that we're here to discuss. So the announcement 2 weeks ago in the budget of the government now adding a cap to credits that are given for charitable giving was quite a surprise to Philanthropy New Zealand, and most likely a surprise to all of you on this call as well. It was most definitely a surprise to those of us who had sat through an excruciating amount of consultation over the previous 18 months with IR on charities and associated issues to do with charities. Over the past 2 weeks, in thinking about the issue of a cap on a rebate that can be claimed on charitable giving, I think for me, I feel that there is huge unintended consequences of perhaps what might have been intended as something positive. But I see the whole issue as about unintended consequences. And I think this lies in a fundamental lack of understanding and a lack of evidence about the value and the impact of the philanthropic and charitable sector in Aotearoa. And I think this enables, or it's part of the enabling mechanism that enables a lack of transparency in the size of the issue that the government, or issues that the government tells us that it's attempting to address. And certainly in the media that I've done in the last couple of weeks, and so have some of you, the minute the media smell that there could be an issue around bad actors or bad behaviour that the government is seeking to address, the tone of the conversation changes. So there's a perception that there is significant bad behaviour out there and what IR called bad actors. I think we need to remember, and all of us are part of a charitable sector that provides services that government would otherwise need to fund directly. and it's increasingly reliant on this. These are, right across the spectrum: social services, sport, health, environment, education, arts, research, and innovative initiatives that require sometimes longer term prototyping. In many cases, I'd say most cases actually, charities deliver those services at a much lower cost than if the government were delivering those services. We know that. All of us draw on volunteer labour, community networks, and philanthropic capital that can't be replaced by a government grant. Every dollar donated to an effective charity generates social value that frequently exceeds what that same dollar would achieve if the government was running that service. So the scale of the potential consequences, and certainly the people that I have spoken to have not been aware of the consequences of this. This is what I mean about unintended consequences. So the scale of potential consequences for charitable funding, for communities, and for New Zealand's emerging culture of major philanthropy warrants, I think, much more thorough examination of what's been possible to date. And we know, I can see you, Eleanor, on the call from Community Foundations Aotearoa. Community foundations frequently speak, as many of you do, about the intergenerational transfer of wealth that's coming, and the fact that many other countries have enabling mechanisms to encourage philanthropy. And this is certainly not part of what we see across other countries like Ireland, like Singapore, like Australia, as promoting a culture of generosity. I think the impact of the large donations are a concern, and some of you have spoken about those. And we think about capital campaigns for things like, well, just random examples I can think of, the Christchurch Cathedral rebuild or a major facility somewhere, some of those large capital campaigns. But also I think what I've found isn't really well understood is the impact this is of donors who give to many organisations, because this is a cumulative thing. If you give, $300,000 in a year to a whole suite of organisations, only $100,000 of that will actually qualify for any tax relief. And I think certainly people I've spoken to in the media don't really understand that. They think about high net worth givers who this doesn't really affect because they've got a lot of money and they're not really worried about this. And I think people haven't understood this affects donors who are giving to multiple organisations where the amount of money adds up to more than $100,000 in any one year. So I think that's something to be really concerned about. So a friend of mine worked out that they could give $3,000 to a small organisation annually because they knew that they could claim back $1,000 of that and then give that $1,000 to another organisation. So there's a mechanism of really growing the amount that can be given here. And I think we want to work towards creating an environment that encourages a generous nation and generous people. And this policy announcement discourages this. I think there's a really critical question around what do we do now? What can we do? We sent a letter to ministers, and a number of you were signatories to that letter. We are yet to have a reply to that letter. From what I've heard from people who have spoken with related ministers, some people seem to have been surprised by this announcement. I think we need to figure out how to work constructively towards an outcome that serves both the government's objectives and the communities that depend on a well-funded charitable sector. So there's a lot of questions in terms of research questions that sit out there where we were told through the consultation by IR that there are a number of problems in this sector that they are seeking to address. We've been asked to believe that on a believe me basis. We haven't been given, I certainly haven't seen facts and figures that support the size and scale of that issue. We're told it's a significant issue. We also know that there are mechanisms through charities services, existing legislation that could be used better. to call out bad actors, but we don't know the size and scale of the bad actor problem. So I think there's a number of, we're on the back foot in a way because we don't have lots of great research to draw on to answer some of these questions. And IR are putting these things to us as a statement of fact. And some of you were at the meeting with Charities Services that I was at last week, where Stuart from IR was in attendance, and made it clear that some of these things that were in the statement of regulatory impact, from their point of view, are statements of fact, and we just don't have transparency around where those facts have come from. So I guess from Philanthropy New Zealand's point of view, we're concerned about the chilling effect that this announcement may have on giving, and may also have on undermining public trust and confidence in the charitable sector. Trust is very hard won. It's really easily lost. So we have concerns around that trust and confidence in the charitable sector and the amazing work that Charities and Aotearoa do. So I guess in a nutshell, that's our concern about it. So at this point, I'm happy to hand back to you, Jenny, and for our next speaker to jump in. Thanks, Jenny.
You're on mute, Jenny. Someone had to.
Shouldn't be me. Thanks, Robin. I was just saying there's some very interesting questions and responses coming in on the chat. So hopefully you can all see those as we go through, and I'll try and pull them all together once we've heard from each of our speakers. But the next person I'm going to hand over to is Stephen Moe. Stephen, who's hosting this podcast for us and who's doing wonderful work with his team at Parry Field around the broad issues that face the charitable sector, but also, Stephen, your podcasts around the philanthropic sector and the not-for-profit sector, the for-purpose sector, have added huge value, I think, to the kinds of discussions we're able to have as a sector. So thank you, and I'll hand over to you.
Thank you so much. Tēnā koutou katoa no America hono te tematanga no ototahi toku kāinga e nai nei. E roia toku tunga mahi o Parry Field Warriors. Ko Stephen mo toku ingoa, no reira ngā mihi kia koutou katoa. Yeah, it's a real pleasure to add another welcome from another voice. I'm really grateful to see so many friends and people I know, but also some that I've never met before, just scrolling through the names that have joined. It's great to see the interest, as Robin was saying, maybe not for the reason that we hoped, but it's still good to see that the sector is kind of coming together and thinking about this. So I'm just going to have three quick things that I'm going to speak to, because we want to get into a bit of a discussion and a bit of back and forth. So there's three things. I'm going to speak to a couple impressions that I've had on the change. I'm also then going to talk about some of the positive things that we might be missing, because there were some changes which were actually good news. So I want to make sure you all know about that. And then finally, some thoughts on next steps. So the first thing, and one of my colleagues, Bridget, is going to put a link to this in the chat. This was a little paper I put out with Dr. Juliet Chevalier-Watts, looking at charities and tax and the missing analysis. And what we were trying to do there was consider some of the things that we think are missing in terms of what is going on here. And one of the things to highlight, because Robin's done a great job with that outlining of what's going on, the thing that really struck me is that when it came out, it was this emphasis on it will only affect 350 people. That's 0.1%. It's not many people. But the reality is that those people contribute around 10% of the overall donations. So in this case, $100 million. So of $1 billion, 100 million are coming from those people. So they are important, and it is going to have a big impact. And I know, looking at the names on this call, some of you can already predict. I can imagine capital projects, or some of you I see from religious organizations and building of a new thing, a new church or a new facility, community groups wanting to build a youth center. All of these things are going to be impacted. The other thing that I thought I'd mention is it could also discourage setting up of new things. Think about family foundations and the foundations that you all know. We all know household names. A lot of those were set up by generous people who gave a large amount to start them. So what will this, is this going to encourage people to be starting new things when they've sold their IT business or whatever it is and they've got some money? So that's interesting to think about as well. And as Robin said, this isn't, I think a lot of charities are going, well, doesn't affect me. We've never had $100,000. But actually, what they don't realize is that maybe they've gotten 15,000 from this donor who also gives 15,000 to 20 other organizations. So I think it's just good, just emphasizing a couple points. But in the paper, we tried to go into that. So if you're interested, you can have a look at that. The second thing I wanted to mention is just briefly that there are some positives in changes that were announced. So I think it's important to always be looking glass half full that there were some changes. And I wasn't sure if all of you were aware of it because this has taken a lot of our attention. But some of the positive things is that there was no change to membership subscriptions. So there was a question over whether those should be taxed. And the answer is no, it will continue as it's been. So that might affect some of you. The other thing is there's an increase of the tax-free threshold for small charities from $1,000 to $10,000. We were on a call the other day with Charity Services, and they said that could impact thousands of these smallest of the small charities who right now have been registering becoming charities because they're just over the $1,000 tax-free threshold. So imagine that if there were actually thousands of entities that no longer have to comply with all the reporting and all the things. So that might affect some groups that you know of that would be wanting to know. And then the final two I'll mention is that there's going to be a change to allow for in-year refunds. So that's actually quite significant that as you're donating, assuming that you're paying tax as you go, you'll be able to claim back the 1/3. So that's not to happen right away. That's coming in April 2028, but it is a positive change. And the final one is the ability to transfer tax to charities that you've donated to. So this is quite a significant shift as well. It's when the donor claims back the 1/3, they can then specify that that 1/3 goes to the charity rather than back to them personally. I'm about to release a paper on this because I think it needs some tweaking so that that election is made when the donation is made rather than when you claim the 1/3 back. Because we all know there's massive leakage from people donating to actually claiming. A shockingly low percentage of people actually claim the 1/3 back. But I just wanted to mention those as some positive things that may not have been on your radar. And then one that's interested some larger charities has been the active investor visa has changed to allow people who coming to New Zealand, they can give to charities and it counts towards their visa requirements. So this might affect charities which are looking for different funding sources that actually you could have a wealthy investor coming in and donating you money, ticking the box for their visa requirements, and you get the funds. So hopefully a little bit of sunshine among the clouds. And then, yeah, my final brief comment is just to say, why does it feel like we're always having to be reactive as a sector? And it's always something's happened, we didn't expect it, and now we have to gather together. What would it look like if we could be more proactive and actually come together in advance, share ideas, fund the research, put forward policies, rather than feeling like we have to react? Because a lot of you will remember about a year ago, it was all about the tax on charitable business income. And I think the sector stood up and that did not proceed, but it feels like it's a bit of deja vu around a different issue. So I've got some thoughts about how we might do that, but I'm going to hand back to you, Jenny, to pass to our next speaker. Thank you so much.
Thank you, Stephen. That's very helpful. And once again, if you can listen and read at the same time, everybody, there's some really interesting conversations happening in the chat. And thank you for all of you who are not only putting in questions, but where you have information that you think would be helpful, putting answers in as well. So I think that's going to be a very valuable source for us once this meeting is over. So I'm now going to hand to Craig Fisher, who just got off his surfboard in Raglan and has probably still got his board shorts on. Many of you probably know Craig. He's been around the charitable and philanthropic sector for a long time and is one of the wise heads in our sector around issues such as taxation. So Craig, you're going to talk to us, I think, about why capping is a dumb idea.
Thank you, Jenny. Kia ora tātou e te whānau from lovely Whaingaroa. Just to clarify, I haven't been surfing. I've been busy working, but there we go. Yes, I'm a chartered accountant. I'm a former audit partner, a former standards setter for audit standards and ethics and other professional standards for accountants. And I'm a trustee of a number of charities, a chair of a couple of them, and I'm a governance consultant. So I see a lot of what happens in our space. And as Jenny has delightfully introduced, based on all of that, I think this is a really dumb idea. It is not good long-term thinking for a healthy, successful Aotearoa New Zealand. It is very short-term policy in my mind, and I think what we are seeing here is unfortunately a classic case of a sledgehammer being used to crack what may be a very small and specific nut. And I'm a bit sort of mystified by that. And especially as has already been referred to, a number of us have been in conversations with IR about other taxation changes for quite some time and invested quite a lot of our time and energies into providing good information. Just up front, before I get into the economics, we live in a democracy. We vote governments in and out. And then governments get to make big decisions for the health of all of us, one of which is what gets taxed. They're making these decisions on the country's behalf and on our behalf. In this particular one, it really concerns me that IR were not allowed to consult on this particular change. That to me is a fundamental barrier to a good, healthy democracy. Not being able to have the ability to debate. And I just struggle to see how this policy that has, I think, a chilling effect, disincentivizing very generous people to be even more generous and continue to be generous, has a chilling effect in the sector in New Zealand. So the economics of this, Stephen's already mentioned, it only looks at about 350 donors, 0.1% of donors in New Zealand, but they account for over 10% of charitable giving each year. So that's a significant amount. These are wealthy people, but they are being very generous in terms of what they're actually giving. Some of the rhetoric that was put out with this was that there's a fiscal saving to the government, estimated at $19 million per annum. But what they didn't tend to emphasize was that by saving, and I struggle with that word, but anyway, saving 19 million, we're putting at risk gross donations by donors who give more than 100,000 annually of a total amount of 103 million a year. So to save 19 million, you may be putting at risk 103 million going to the sector. And this is money, importantly, that the government is not paying. This is money that's coming from generous individuals. Generally, that money will be tax paid or it will be coming from their residual wealth. So I struggle with that. But let's just take the economics of it. If we've got $100,000 donated to a charity, the charity gets $100,000 to do its charitable mahi. This is coming from a member of the public. It's not coming from the government. The government in turn gives $33,000 back to the donor as a tax rebate. And I struggle with some of that language, but I'll just hold that at the moment. So it's a cost to the government of $33,000 in lost tax revenue. To unlock $66,000 net that the government hasn't had to fund. So to me, that seems a pretty good ratio. It's costing me $1 to get $2 in return to the sector. When actually the sector gets more than that because it gets the full 100,000. I think it's also worth noting that charities are generally, and in my experience, I've seen this proven over 30 years of acting for charities, generally much more effective at doing their mahi than government departments are at doing the same mahi. So we are, in effect, reducing the potential funding to very effective deliverers. And I just struggle to see how this works for New Zealand long term. Someone's mentioned in the chat also about tall poppy syndrome. We do have a very ingrained tall poppy syndrome in New Zealand. This is something which is actually going against helping wealthy people be supportive. It's lessening what they can actually do. So yeah, I struggle with all of that. I think that's enough from me at the moment. Jenny, I will pass back to you.
Thank you, and thanks for the questions and the challenges. What I'd like to do now is just invite Sue Barker to speak to you. Sue will be well known to many of you from Sue Barker Law. And Sue, you have been a dogged, if I'm allowed to use that word, advocate on behalf of looking at some of the legal mechanisms that actually the government of the day and previous governments have had at their fingertips that have not been used, some of the powers that the Charities Registration Board does have. And so we're very interested in hearing from you. Thank you, Sue.
Thank you, Jenny. Tēnā koutou katoa. Hello, everyone. It's great to be here to speak with you about what I'd actually like to do is pick up on some of Craig's points about the language that gets used. But before I do that, for those of you who don't know me, yes, I'm the director of Sue Barker Charities Law, which is a boutique law firm based here in Wellington, specialising in charities law and public tax law. And also I was honoured in 2019 to be awarded the New Zealand Law Foundation International Research Fellowship to undertake research into the question, what does a world-leading framework of charities law look like? And so I spent 2 years on sabbatical interviewing people from around New Zealand and around the world. So if you're interested in that, the Focus on Purpose report, I can put a link to it if you're interested. But a lot of what I'm about to say comes from that research. But IRD's regulatory impact statement justifies reinstating the cap on the basis that the donations tax credit is a concession, that results in an open-ended subsidy or fiscal cost that reduces government revenue and therefore transfers the cost to other taxpayers. So this language and the assumptions that undergird it derive from an economic theory known as a tax expenditure analysis. And it's important that we as a sector are across this theory because it appears to be driving IRD's thinking and their recommendations. So broadly, a tax expenditure analysis conceptualizes tax privileges for charities as a subsidy and then recasts the tax revenue said to be foregone from such subsidy as a direct tax expenditure by government. And this amount is then used as a means of estimating the cost of such tax privileges so that they can be assessed against alternative policy options, such as a system of direct grants. And you might recall this was the approach taken in 1987 by Sir Roger Douglas when he proposed a flat tax of 15%, including on the income of charities. And he proposed to support charities instead through a system of direct funding by government. This proposal was very controversial and it didn't proceed, was ultimately kicked for touch to the review or a series of reviews that ultimately led to the Charities Act. But the tax expenditure analysis that underpinned it remains, and it can be traced back to the 1960s and the work of Harvard law professor Sir Stanley. It then spread around the Anglosphere, including to Canada, Australia and New Zealand, all of which now issue annual tax expenditure statements with tax privileges for charities specifically listed, and you can see ours each year on the Treasury website. But even Stanley Surrey himself acknowledged that a tax expenditure analysis has its limitations. For example, a key difficulty is that it measures only the cost. So it therefore structurally ignores the benefits provided by charities, such as contributions to social cohesion and democracy. Now, these benefits may be intangible and difficult to measure, but they are nevertheless critically important. In fact, they arguably represent the very reason tax privileges are given to charities in the first place. A tax expenditure analysis encourages a perception that the decision to award tax privileges to charities should be based on government perceptions as to what is worth subsidising out of public funds, rather than whether the thing itself is of public benefit. Such a perception causes charitable funds to be seen as government funds over which government feels justified in wanting to exercise control. But there are very strong arguments that the tax privileges for charities are not a concession. Now, if you'll bear with me for a moment, the analysis is based on an assumption that taxing charities is a normal part of the benchmark structure for tax calculation purposes, and that charities' privileges are a departure from that benchmark and therefore a concession. But tax systems are generally designed to tax individuals and businesses on their personal gain, which results in a misfit for entities such as charities where personal gain is prohibited. So while there is no universal agreement on the ideal tax benchmark, which may be politically contestable, there is remarkable consistency around the world in providing tax privileges for charities. So on this basis, charities are outside the normal tax base and their tax privileges are not a concession. The tax expenditure analysis is harmful to charities, in my view, because it encourages a mindset that charities should be subsumed within the public service agenda, which fundamentally undermines their independence, the key factor that makes them distinctive and valuable. The alternative view is that charities' tax privileges are not a concession, but merely a proper measure of the tax base and an investment in the kind of society that we want to live in. So under this view, while some individual tax activities might not be selected for subsidisation in isolation by the government of the day, this is tolerable because governments are constrained by the dictates of the median voter. Some overbreadth is merely the price we pay for living in a liberal democracy. It appears from publicly available information that IRD may have been focused on the Right Family Foundation and its Best Start childcare business. And I'd be happy to talk more about it at this time, but the short point for current purposes is that this transaction didn't even involve a donation tax credit in any event. It proceeded by way of a sale of shares. And the fact that running a childcare business is itself charitable for the advancement of education also appears to have been overlooked. IRD refers to circular transactions in which a donor controls a charity to provide private benefits back to the donor. But IRD has not grappled in any of its publicly available documentation as yet with the fact that this cannot lawfully occur under existing settings, and the alternative option of simply enforcing the existing law has not even been raised as an option for consultation to date. IRD also refers to such charities accumulating funds and making little or no distributions. But as we all know, there are many legitimate reasons why a charity might accumulate funds. It always depends on the facts of the specific case. So in my view, there is a significant question as to what problem we are actually trying to solve. And it is disappointing that we are faced with yet another significant measure for charities rushed through under urgency without proper consultation. So with that, I'll pass back to you, Jenny.
Thank you all very much, and thank you for those who are coming through the chat. What I'm going to do now is just give a quick summary of what I think I've heard, and then I'll see if any of the various members of the panel want to add any more comments. But I'm certainly picking up on the comments that a number of you have made about what our response should be, how it should be organised, who else should be in the room, as it were. But just really quickly, I mean, I think all of our presenters have been in agreement that there are unintended consequences of this, that it's poorly thought through, that it's going to have implications beyond, I think, what anybody who was privy to putting this up really, really understood. And then underneath that, I think there's a whole lot of issues about the perception of problems in the sector. And it seems to me that as a charitable and philanthropic sector, we need to join arms and come back with some decent research about what actually is happening. And I mean, I think all of us have said consistently, because we've been consulted on these issues as a sector for what, the last 12 months or more, we've consistently said, if there are bad actors, then deal with them. Use the measures that the government has at its disposal to do that. And it's problematic to hear various media commentators, I think, constantly raising these issues, because it's not really very clear to us who these so-called bad actors are, or how many of them are. I mean, I think we've raised the concern about accountability, about democracy, about the lack of debate on this measure. But I guess by getting together today and actually agreeing that we do want to act collectively, we're taking the reins on this, whether the government of the day wants us to or not. I do feel quite strongly, and I'm going to throw this back to the panel now, if you all want to think about what you'd like to add into the debate at this point, that we really need we've got to fight the misunderstanding that has been constantly put out through the media with some hard data. And I mean, I think, Stephen, was it you who said that it may only have been 10% of donors that are targeted for this, but in fact, you're talking about putting $100 million of potential donations at risk. I mean, I think we need that kind of data, as well as putting some other myths, if you like, to bed. So I
Jenny,
think,
can I just...
Yeah, do. Let's
just
make it more of a free conversation now.
Yeah, just to raise a point on that. In my former life as an audit partner, I used to audit government entities, corporate entities, and lots of charities, for-purpose organizations, not-for-profits. You find bad actors in any sector.
Yeah.
I used to work on the theory that there was 1% of absolute rogues in any population, and probably 5% that were a bit dubious. Interestingly, in the for-purpose sector, or the charitable sector, or whatever you want to name it, the impact of anything about a bad actor always seemed to be disproportionately great. And I saw that even amongst some of my own client base, where a fraud was found in one charity. It was publicized heavily, and it got to the front page of the newspaper and all sorts of excitement. 3 other charities that I acted for at that time that had a similar name, not the same, but they had a similar thing in their name, and I won't go into the detail of that. All 3 of those other completely unconnected entities had a significant decrease in their donations as a result of the media on it. So for some reason, the media seems to get much more excited about bad activity in a charitable sense than it does in a corporate sense. And I can assure you there is much more bad behavior in the corporate world than there is in the charitable world, from my 30 years of experience. So I'll just throw that in there as well.
Thank you, Craig, and I am keeping an eye on the time. Robin, I'm going to throw to you in a minute, but I think there, and really I'm responding, I think, to Cheryl. It was your challenge, like about a united take on this. I think it's also important to understand that there are many individuals who aren't on this call today who have been having conversations with ministers, some people who have the Prime Minister's cell phone number on speed dial are trying to get to talk to him. So I think there's quite a lot going on behind the scenes, which is actually good. And we don't need to necessarily know about it if it's having an impact in terms of the information that the government's giving. So I'm not suggesting that we don't need a concerted approach, but I think, Robin, you probably, of all of us, might have the best handle on what is happening. And you've already sent the letter with over 60 people and organisations signing it. What's your sort of feeling on the best way that we might take this forward?
Thanks, Jenny. Yes, as you said, we sent a letter last week, and we know that there are more people who may not have made that letter or have become aware of it later that would still like to be signed up to it. I would encourage anybody on this call to be making your thoughts on this and the reasons for your thoughts known to either the ministers concerned or to your local member of parliament. It does seem from the feedback that I've heard that ministers are quite surprised by that this is causing such a ripple. and that they seemed surprised by the impact of it. That seems really surprising to me, but maybe it's because I've worked in the sector for a wee while. But I agree, Jenny, we need a concerted effort of some sort. This is election year. I think that we've got a lot of research questions sitting out there that we don't really know what the answer is. Simon, I can see you've got some great ideas in the chat. How about what we do next is some well-articulated research that demonstrates the impact of the charitable sector and the tax credit. I agree with you. I haven't read the rest of it, Simon, because everybody can read it, but published guidance from the IR that explains the responsibility of trustees of donor-controlled charities. And Sue, you have made this point over and over, and I checked before I did a media interview recently, that what IR were talking about was, in circularity, is illegal behaviour. So it's not legal to do what they have spoken about. There are tools to deal with illegal behaviour. How about charity services start using them, or they are resourced in a way that enables them to do that? And Simon, you've got some other ideas. There are a collective approach to the way we describe tax credits, yes, and I'm guilty of using the wrong language there, as a benefit, exactly as Sue or Steve or Craig, one of you noted, is the benefit to New Zealand society. And those of us that have been around a while might remember the value added by voluntary sector research, which was done 1 million years ago by Suzanne Snively, but it did attempt to quantify the value added by the voluntary sector in Aotearoa. So we're missing some vital pieces. We're also missing the proper evidence from IR that there are the problems that you have all spoken about, Sue and others. So I feel like undertaking some research is a really great idea. I also feel like we need a collective effort, and perhaps we could have a bit of a steering group to guide that work going forward. Individual actions, I can see you've put something up there, Craig, about individual actions. Totally with you. Individual actions, individual letters. Council on International Development Centre letter. Some people have asked you in advance of this conversation today whether I've heard back as a response to our letter that some of us sent, and the answer to that is no, I haven't had a response to that yet. And I will come back out to people when I have received a response. I haven't seen in the chat, and please, I might have missed it, please feel free to put in the chat if you've had a response from one of the ministers concerned about this. That would be super helpful. But I think, handing back to you, Jenny, we do need some kind of concerted, cohesive kind of effort. We also need a proper reframing of the conversation on the value added by the charitable sector in New Zealand. Any of the media articles that I've been involved in, and others of you on the call have been involved in these as well, have been very positive around that value until we get to this discussion about the supposed bad actors. And the journalists who have read the regulatory impact statement are across the fact that IR are concerned about the bad actors. And we've all stated we're also concerned as well. So it's not that we're not, it's just that we perhaps have a different view of how those bad actors should be dealt with within the law that we have in Aotearoa already. So I think some kind of concerted effort going forward and some kind of research is what I would proposition, but not leaving out your individual actions as individual taxpayers, constituents, leaders of organisations, anybody in Aotearoa. Thanks, Jenny.
Thanks, Robin. I mean, just looking at the questions, the comment that's coming up through here, Robin, are you happy to act as the point person, I guess? I mean, there's a few people here and have said, they're interested in a research project. Obviously, we'd have to raise some money, and we'd have to raise it fast. I mean, we've got an election coming down the pipe really quickly. So, I mean, if you're happy to act as the point person on that, anyone who's interested in supporting that in any way could perhaps go directly to you. There's a few questions in here about the letter. you haven't actually released it publicly.
Jim has put the letter into the chat, Jenny.
Okay, cool. So that answers that question. Other comments from the panelists in terms of just what we're seeing in the chat? I mean, it's, the messages are flowing in, team, so I'm struggling to read them all, but
I'll jump in with something.
Stephen, thank you.
And as follow-up to this, we're recording this because we always know that some people can't attend on the day, so this video will be sent around. So one of the things that you can do to raise awareness is to share and let people have the link to the video. We'll get it edited and sent. And we can send that letter as well, Robin, if that's okay. So the thing I was going to say was, like many of you, and in the chat somebody said, what about OIAing for the IRD's internal discussions? So I did that like the day of the announcement. I'm sure some of you did as well. I haven't heard back yet. But on a recent call with Inland Revenue, they did say that in July they will be releasing some of the papers that are sitting behind the decision making. So I'm not sure. I think Craig and Sue, you were on that call too. So I'm not sure if he said the date, but it was definitely we will be publicly releasing information, additional information. So I thought that was helpful. And I just thought I'd note that in case people were wondering. And then the other thing is something that Craig and I are often chatting as we're driving or talking about the positive role of charities and the fact that we don't talk enough about the good that's done. So this is like a specific issue, but we also need to be thinking, how do we raise the profile of the good that charities do? And it's something that we're constantly raising with charity services about public trust and confidence in the system. How can we have the profile of charities raised? Because as we've said, it's 0.1% that are maybe negative. The vast majority, and all of you on this call, I'm sure, are doing amazing positive work. So, and then related to that, I think we need to, as a sector, a broader sector, we need to start talking more because I think we've been getting too much into silos of thinking. So I'd love to hear that there's lots of different letters, but it would be great if the healthcare part of charities knew what the arts was doing and the sports and so how can we talk across? Because the reality is we probably all are facing similar issues, similar questions, similar things. So that's what I'd like to see is somehow we come together across the different specialties and start talking more proactively. And if we did that, I think we could react in a more proactive way rather than this sort of, oh, there's a negative thing, now we have to respond to it. So a couple things to add there. Thanks, Jenny.
Thank you, Stephen. And just looking at the chat, I think any of you who know high net worths who are prepared to go and talk to either their local MP or if they have contact with ministers, they should do it. I mean, I think the fact that this is the sort of third iteration for some of us around these issues, and it's just been fascinating for me to see who's come out or we know has come out publicly or has actually not come out publicly, but we've heard through various contacts that we know they have. I mean, I think that's going to have a far greater impact. I mean, there was a huge article in the Herald about philanthropy on Saturday, the Auckland Herald, which mentioned this issue. There was a lovely coverage in the Sunday Star Times of the arts and the challenges that the arts sector is facing that also mentioned this issue. So it's becoming quite cross-sectoral. Craig, I'll throw to you.
I think Sue was before me.
Okay.
Jump in there, Sue.
Oh, thank you. Well, I just wanted to mention two things. One is that probably everyone has seen the policy just issued this afternoon by the Opportunity Party. They want to remove the cap, and they also want to do a proper first principles independent review of charities law by the Law Commission, which, on its face sounds fantastic. And I've wanted, if you look at the Focus on Purpose report, recommendation 1 is that we do a proper independent first principles review by the Law Commission. It would be wonderful to see that. When you look at their policy, in more detail on their website, they are pushing for minimum distribution requirements, executive remuneration provisions, related party provisions, etc. So it is a very regulatory focus. And the other point I just wanted to make is that IRD's alternative proposal was to impose very complicated tax rules on donor-controlled charities, which itself is an oxymoron because a donor can't lawfully control a charity to divert charitable funds to private benefit. But I'm very, very glad that they have not proceeded down that route. Although it might, on its face, have only affected a few charities, it would fundamentally alter the underlying access of charities law in New Zealand, because we specifically made the decision in 2005 to remove administration of charities law from IRD, and it would fundamentally move us back and tie charities up and not with bright line rules that are not fit for purpose. When people call for a targeted approach, I just worry that we might go down that very regulatory approach, which I think would, take us out of the frying pan and into the fire. What I would like to see is that we actually work with the existing law. The fiduciary duties provide perfectly adequate oversight over charities' activities, and they do so in a way that is simple, clear, and easy to understand. So I'd really like to see that we work with the underlying law rather than come across over the top of it with all these rules that will make things worse rather than better.
So, Craig.
Thank you. Well, can I just tautoko what Sue just said as well? I'm well done to the Opportunities Party for coming out saying that there's a policy to rescind the legislation. Well done also on the Law Commission review idea. Some of us were involved, goodness me, back in 2014, I think it was. It might have been in 2011, and the Law Commission review around incorporated societies. Really thorough, really good process. Actually a really good, sensible, long-term result for New Zealand in terms of what it actually did. I think that we also need to not vilify people in this. My experience, and I'm not a tax guy, but I've been dragged into discussions with the Inland Revenue Department over many years, and especially around charities, and that there's some really good, hardworking, thinking people in there. So the decision on this particular issue has been a ministerial one, not an Inland Revenue one. So I think that's important to note. We also have a regulator of charities, which is Charities Services. Unfortunately, very unfortunately, it used to be an independent Crown entity. It is no longer. It was absolved, or whatever the right word is, into the Department of Internal Affairs. And since that time, and some of us, myself for one, have been involved in advisory groups trying to provide information to them, both bouquets and brickbats, for a number of years, have seen that Charity Services has been, I think, pretty woefully under-resourced to actually be an effective regulator. And that's really sad to see. So, there's some good people out there trying to do some good work, but we do have these mechanisms. If we use the right mechanisms for the right thing, this shouldn't, as Sue says, shouldn't actually be a problem.
Thank you. Now, we've only got a few more minutes. So what I'm going to suggest is that the 5 of us, if that's the right number, reconvene after this and digest everything that's come through, because there's just more and more really, really good ideas coming through in the chat. And work out what the most strategic thing to do is, and think about how to actually get to the people who are making the decisions. Think about timing, think about the complexity of an election year and what it means, and also think about who are the best people to go and speak to some people, because in some ways, if we could somehow hand the government a win-win, then that would be the best possible outcome for everybody. But as I've said already in this conversation today, I am concerned that we don't have robust enough data behind us at the moment to go and have those conversations in a convincing manner. So I'm going to see if any of the panel want to make a final closing remark. Robin's got a hand up.
It was just in response to the question about when I asked IR at the charities meeting last week for their research, which they quoted, around the value of the charitable sector to New Zealand. And Sue, I think you or Stephen, somebody knows this PhD research. It was researched by a PhD student whose name eludes me at this point, which showed that charities were basically a cost to New Zealand. So for every dollar that was invested, I can't remember how much was lost. But in my opinion, the research must have been quite flawed. And also IR seem to be relying very heavily on it. And speaking to your point, Jenny, around the lack of research, our lack of ability to speak to government about the value added by the charity sector in New Zealand. So I'm really looking forward to the research being released by Community Foundation's Aotearoa in September that you've undertaken, Eleanor. And I don't know whether there's any research that you have on hand that is coming out before then. But that research will be really important to the sector on donor behaviour and motivations for giving. But if anybody's got a link to that research that IR quote, if you could pop it in the chat, that would be helpful, because I haven't got a link to it and somebody's asked. Thanks, Jenny. Thanks, everybody.
Okay. Stephen, any final comment from you?
No, just that this group here, each of you are doing such amazing work. Let's just keep working the best we can. Let's coordinate. Let's try to do things in a cohesive, together way. But yeah, grateful that so many have showed up for this, and let's see if we can keep the ongoing momentum going, not just about this issue, but about other ones as well.
Thank you. Craig?
Yeah, this is really important for New Zealand society and the long-term health of it. So everybody doing anything that they can is important. And we need to focus more government away from short-term policy to long-term multi-generational thinking. What would be best for Aotearoa New Zealand?
Thank you. And Sue, I'm going to throw the final ball to you.
All I can say is support all of that's just been said. Thank you very much for hosting us, Jenny and Stephen, and thanks, Ron and Craig, for the discussion, and everyone who's joined us. I really appreciate the discussion. It's so important that we work together. It's that cliche, united we stand, divided we fall. Those cliches are cliches because they're just true.
Well, thank you, and thanks everybody. And there's a lot of links in here, including to that piece of research, which so there's a lot to go on. I think what I'll encourage everybody to do is offering on behalf of Robin for her to be a touch point, a clearinghouse, so at least we've got somewhere where we can sort of channel what people know, what people have found out. I do think this is really, really important, and it is a good chance for us, I think, to actually stand up, and if we can get some good data and some good research out there, perhaps help. I mean, we all know the government wants to grow philanthropy in this country, so maybe there's a way that we can pitch this that actually makes that a positive for us all, and for the multiplicity of the sectors that the charitable sector and the philanthropic sector represents. Because if you think about the broadness of the charitable sector, including arts, sports, social services, health, the environment, culture, heritage. I mean, we're actually talking about every New Zealander and their day-to-day lives in some way being impacted by the sector. So I think there's a challenge to us as leaders in the sector to really, get some good, strong arguments and data together, and then take it and talk to whomever, whether it's Opportunities Party, whether it's Labour. Someone wants to go and talk to Winston Peters, but it would be great if we had a consistent song sheet, for want of a bit of a word, so that we're all basically using the same information and data to protect our sector. And actually, as you said, Craig, don't forget we do live in a democracy, and New Zealand's facing lots of struggles, as many countries are at the moment. But we've always prided ourselves as a country on doing things well for each other. So I just encourage you all to stay engaged, and if the time's appropriate, Stephen, we may call another one of these webinars if we've got some more information that we think would be useful to share with you all. Okay. thanks all, and we'll sign off. Thank you very much. Ka kite, and have a great rest of the afternoon.